Hello and welcome back, guys, to the channel. So without further ado, guys, in this video I'm gonna be talking about gold, where we have been from, where we are now, and where we are probably going based on the long-term view. So I'm gonna be talking about the previous months, like from April to May, how gold has been moving and what opportunities we as smart money traders got and would have got. Yeah, so let me get straight into it, right? So this is the gold chart on the 4 hour time frame, and I'm gonna be talking about this downtrend because from like April 14th right here to 20th, we've been bearish until now. So this is the point that I feel like I'm going to be talking about in this video, right? How would you have noticed what's going on, and how would you position yourself to be able to catch these moves, right? So if we zoom in, let's zoom in real quick, and when we zoom in, we find that we had this uptrend, right? We had this uptrend, and then this uptrend came to be invalidated right here with this move here. This move here, where we just broke structure to the downside, and that break of structure right there, this break of structure right here is what initiated this whole downtrend on gold, right? So when we broke this low, we had this right here as our protected low, right? And I'm gonna soon there'll be a video out on this, on how to recognize these protected highs and protected lows, but it's simply based on order flow, right? So if you understand order flow, then you most probably understand what I'm talking about here, because judging by order flow, it means that we had these low, high, low, right? High, low, high, low, right? We are only targeting those moves that either broke structure and retested, right? So as you can see, there's a break of structure here with this move, a retest, a break of structure here with this move, a retest, again a break of structure here and a retest. But when we made this retest here, price failed to break the structure high, leaving this as its lower high and breaking this structural low here to form this as its lower low, right? So price has now shifted from this from this bullish direction of highs and lows to something like this, right? And we are targeting this break of structure here, right? What we are targeting is this. So this right here is this here, right? This break here, it means that what we are considering next is price to do this, right? Take an entry to the S&D zone to where? To lower prices. And that is exactly what happened, right? And let me remove these drones real quick. So boom, price comes, tests, and leaves, right? So again, we're following order flow, right? This as its high and this as its low. And as you can see, you have your protected high here, right? And price makes an intermediary bullish move, right? This move here, which just manipulatory move to create some sort of trendline liquidities, which most of retail like to trade them. But when this thing happened here, it never got above your protected low, right? That, I mean, your protected high, that high which initiated the downtrend, it was never broken. So this means that our downtrend is still valid regardless of this bullish move, right? This bullish move was just a move to come and mitigate orders that were left unfilled, right? So I'm not going to be talking about previous here, right? As I said, I'm going to start from April, the April downtrend to where we are now, right? And this move right here um, came to be invalidated by what, right? Because we have this low, right? And we have a high. We have a low, a high, right? We're only taking the moves that broke structure and their retests, right? So yeah, this move, retest, the break of structure here, 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 and look where that retest went, right? So we had this break and then this break, meaning that this low is now what? This low is broken, right? As some people would like to call them change of character, church, or something like that. So when that right there was broken, it means that the market is now leaving us with opportunities, right? And when price shows you that it's going to this direction, right? If price shows you that there's now a shift of balance between from bullish to bearish, right? The probability of the probability of that price making deep pullbacks like these is very rare, right? Instead, it will do something like this. It will make this move, the retest, and then a move, a slight retest, and then the bigger move, right? And then maybe in the next in future you're gonna have these deep pullbacks, but they're really rare to find. And as you can see, right, price broke structure here, this break, and then this slight retest, right? As you can see, the slight retest. Now following the slight retest, right, it breaks structure again right here. This boom, 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 right? This break here, this break of wicks here, right? These wicks, once these wicks are broken, can't seem to get my mouth straight. So once those wicks were broken, price left you with this opportunity. You had this last up move before the down move, the supply zone as I like to call them, right? And boom, so that's where your bearish entry lies. Your stop loss just above that, and you're firstly targeting this, and maybe in the near future this, or even lower. But this is how we take these trades, right? We wait for price to show you a markup that, okay, I'm going bearish, and that's when you start to catch those bearish moves coming again. So let's zoom out a bit. So boom, so now we have this transfer of weak to strong hands, right? And it's just like from bearish to bullish or bullish to bearish, but I will make a video on that too, the transfer of weak to strong hands, right? I feel like it's an important concept that most of people don't know, and I'm sure if you're a newbie, I mean, you can even be a semi-pro or a pro, but you still don't know what that means. And it's not something new that it just came out recently, you know. It's still things that existed in this market, right? But you know, the knowledge about this industry is very wide. You can't know everything. You have to pick what you're learning, and that's where most of people get confused and not be profitable. But I'm not talking about psychology or whatever. So let's go back to the video, right? So after that, we come and make this low with this hit right here as its high, right? High, low, this intermediary high, and a low. We have broken structure right here, but as you can see, right, we have broken structure. So what we can do is put this as a breaker structure, and let's see what opportunities would we have had there, right? So we have that breaker structure, and let's zoom in, probably make this wide a little bit. Yeah, boom. So yeah, right there. So we have broken the structural low here, and we're wondering where will our opportunities be for us to catch this bearish move. lo and behold, you have your what? Your last up move before the down move. That of course it gets liquidated, but this liquidation, look at this liquidation, right? This liquidation comes here to this little green candle here, right? If I put the chart like this, it's clearly visible, right? This candle here in between is what got this test, right? So as I said before, you have to be very careful in picking the S&D zone that you want to trade from. So boom, there's your zone, and that's another entry, right? That's another entry. Boom. So your stop loss just above that zone, and you're looking to target what? The low, right? So this is the low or the high. That's the next anticipated liquidity run, right? So these lows are not just lows, right? They're lows and they're liquidity target anticipation, right? Boom. So that's your second trade, right? Just like that. And lo and behold, what do we have yet again, right? So boom, we have this low and this high. Where's my highlighter? There, right? So we have a low and a high. This is not a break of structure, because if you can clearly see, it's just wicks that come above this area here, right? It's just wicks. And as I said before, previously in the mitigation and imbalances video, if you don't know what that means, go check out that video. I said that if wicks are the one that go above or below that structural point, then it's not a break of structure. If it's a break of structure, you want to see the body of the candle break it and close below or above it respectively, right? So without further ado, let's continue with our breakdown. So boom, price then continued even lower, right? As we have this price was clearly breaking structure lower, right? We have another break, and this break was caused by what? This high. So this high caused this break. So we have a high and a low. Where is our anticipation, right? We anticipate price to make a certain pullback for us to be able to position ourselves in it. Lo and behold, what do we have? The last up move before the down move. Boom. That candle there. Of course, you could have used this candle here, this green candle, or the black candle. I mean, that's up to you in terms of refinement, and yeah, everybody have their own refinement. So I myself would have used that, and boom, let's clear that. And that's just what? Third trade. Boom, your stop loss there, your target here, right? So we're just following order flow, structure, and S&D. Just this combination is a whole new beast when it comes to execution, but you have to be very careful in what you're picking and what you're doing, right? Because risk management is above everything. And that low right there was your liquidity anticipation, but still, lo and behold, we do have a break of structure. Boom. So I'm just using these three things, the three key things that I've been teaching in this channel since way back, right? Order flow, structure, S&D, right? That's my arsenal. I don't use anything apart from those, right? And we have another break, right? Structure has been broken. So we have now a lower high and a lower low. What's our anticipation, right? Price will make a pullback for us to be able to position ourselves in it. And where will that pullback be, right? And sometimes, of course, you're going to be having multiple zones, right? For example, here, right? This one was just straight off, boom. And price just moved straight forward, boom. You only had very few places. Actually, the key area was only above it, right? But in some instances like this, you may be confused on which zone you want to pick, right? And I have spoken about this in the previous video where I did speak about how to choose the right order block or supply and demand zone, right? And lo and behold, in here you have multiple choices, right? You have that zone there, this zone here, right? And if you do this, you're always going to be confused, right? If you want to use every zone, it's going to be in confusion, right? So you as a smart money trader, right? I as a smart money trader, right, would have refined these zones, right? Pick out the most value, the most probabilistic zone that was going to be tested, and I would have cleared this, right? This, so I would have had two zones: the original one that initiated the down move, and this intermediary one. Because as I had spoken earlier, that if price is showing you that it's going bearish, right, it's gonna be making slight pullback if the momentum in that market is very high. And these original pullbacks that come all the way from here to the original base, and then these pullbacks are very hard to come by, right? So that being said, I would have used the intermediary one and the original one. So price hits the intermediary one, and there's my entry. Boom. There's my entry with confirmation, of course, in the lower time frames, which I will speak about in the future. So boom. That's my I lost count. That's the seventh, I mean fourth, maybe fifth entry. I'm not really sure. Yeah. So boom. So that's your what, fifth entry? 1, 2, 3, 4, 5. Yeah. So that's your fifth entry. And lo and behold, yet again we have another breakout structure. So boom. Price again right there. So price again breaks structure, and boom, as I said before, right? So price breaks structure, and after this breakout structure, look at what price does, right? Price breaks, right, makes this intermediary kind of structural play, right? And okay, let me return that. Let's do this. Let's make it a little bit wider. And price, after price broke that structure, it formed this low. And after this low was formed, it formed this high as its pullback, right? And this pullback was made right here in this hidden base order block or supply zone. And yet again, if you don't know what that means, check out the hidden base order blocks and demand zones video. So price hits that and makes that as its pullback. And once that pullback is made, price again breaks structure. Boom. Right, and makes this right here as its pullback, and then it fails to break structure. Boom, with this wick, right? It's an absorption wick. It's a spring in the Wyckofian space, but I'm not really going to talk about Wyckoff. Maybe I will talk about it in the future, but for now, let's just stick with these things, right? It's an absorption move, right? So once this wick was made, price made a breakout structure, right? So boom, and this shows you that the bearish pressure in the market is declining. These long wicks, right? As you can see, there's a long wick here, a long wick here, a long wick here, meaning that the bearish momentum in the market is declining. It means that the buyers are stepping in, right? The buyers are pushing this bearish move up, hence forming these long wicks, right? Lo and behold, price breaks structure and forms this high, right? This high, right? With this breaker structure here. Let me label that with that breaker structure there, as well as this breaker structure here. Can we just do this? Yeah, as well as this breaker structure here. So we have structural plays being put into place, right? And these break of structure form form this high point here as the sign of strength, meaning that, I mean, just look at the way this high was formed, right? There was a lot of bullish momentum in the market that triggered these bullish candles to be put into place, leaving all these imbalances below it. And lo and behold, price makes a pullback to where? To the hidden base demand zone. Boom. So there is your bullish entry. So you can see now we're able to position ourselves in both sides of this market without us losing sight or focus on what's happening, right? We're not wrong, right? We're positioning ourselves in places that, based on these three key things, they just make us almost right, all the time. We're being right, but we're just following the three major things, right? So boom, you have that test, you have your bullish entry, and lo and behold, you can look to hold this to all up here because of what? Price has left imbalances, right? And you can use these areas as your targets, right? Maybe your first target here, your second target here, your third target here, and that's the end of the road, right? So without further ado, guys, let's not make this very long, and I hope this has put some impact on you guys. So don't forget to like, subscribe if you haven't, hit that bell button, and until the next one, guys.